So it has been a day and a half for the market after Trump announced sweeping tariffs across every country basically out there. The stock market did this, which it is perfection. It is beautiful. Now, to all of you who may be watching and you're probably like, what is this guy talking about? Everything is in the red, or mostly everything is in the red. What is he on? What is he smoking? It's not 420 yet, number one. And number two, I'm Christian, so I don't do that. But guys, this is actually a great thing. It really, really is. So I'm here to basically be a light in the darkness when it comes to this. This channel is going to serve its purpose for that. And I actually want to take a look at a stock today that fell a lot. In fact, you guys already know by the title, we are going to be taking a look at Apple because it did fall 9.25%. Now, Apple, it's not a semiconductor company to the degree of like Nvidia and AVGO, yet Apple fell more than Nvidia, which is very, very surprising. Now, it didn't fall as much as, AVGO or even QCOM. However, I have done those companies a lot in the past, and I would like to take a look at Apple, seeing that I have not done Apple with the discounted free cash flow. So let's take a look at Apple. Let's take a look at their fundamentals and any news that may have happened with them. And at the end, guys, let's take a look at whether or not at the current share price of $203.19, this is looking like a buy. So before we get started, make sure to like, subscribe, comment. Really does help with the algorithm here on YouTube as well as Rumble. Make sure to follow us on X at Fatal Investing. And of course, if you'd like to join us on the Discord, which is the best place to catch the live streams, the videos, and the shorts, the link to that is in the description below. So with that said, let's get started with this analysis. Now, there are a lot of companies that fell. I mean, if we just take a look at the NASDAQ really quickly, or at least QQQ, which tracks the NASDAQ, it was a bloody day, right? Bloody day. 5.35%. Now, the reason why I'm actually choosing Apple is because Apple, it is the highest holding in the NASDAQ. As you guys can see right here, at 9.35%. And then the next one would be Microsoft at 7.92%. And if we take a look at their previous earnings that they just had on January 30th, we can see that they did beat on EPS of $2.40, beats by 6, and revenue of $124.3 billion, beats by $270 million. Now, this revenue is a 3.9% year-over-year increase. And on top of that, Apple's board of directors has declared a cash dividend of 25 cents per share of the company's common stock. The dividend will be payable February 13th. And then we got our record revenue and strong operating margin drove EPS to a new all-time record with double-digit growth and allowed us to return over $30 billion to shareholders, said Kevin Perrick, Apple CFO. We're also pleased that our installed base of active devices has reached a new all-time high across all products and geographic segments. Now, we can see here all of their net sales by reportable segment. However, there is one specific thing that I really would like to take a look at, and that is right over here. If we take a look at Apple in charts, and again, this was based off of January 30th. So it basically came out the same day. There's a lot of information here. It has things, separated by a product. You got iPhone, then you also got overall wearables and home accessories. You have also segregated by region. You have over here Americas and Europe. However, the one that I'm mostly interested in would that be of Greater China, because we can see here that the year-over-year change for Q1 of 2025 for Apple is actually an 11% down compared to 2024 Q1. You could see that 2024 Q1 was $21 billion, and now it was only $18.5 billion. In fact, basically the latter, or at least the entirety, except for Q1 of 2024, the entirety of 2024 and now leading into 2025, Greater China has actually had really bad revenue growth in general. However, Greater China has definitely been a sticking point to them that has just not been performing as well as the other regions have. In fact, we got this article on the 30th, Apple facing serious competition in China. We take a look at the summary, we can see Apple faces significant competitive pressures in China, the world's largest smartphone market. After an 18.2% decline in iPhone sales, Apple is now the 6th largest player in China. Chinese manufacturers have meaningfully improved their offerings over the last few years by offering similar functionalities at lower price points. They are growing rapidly in an in many international markets. With sales declines in many product categories, the service segment, it is now the only growth engine. The segment is the key element behind the lawsuit announced by the DOJ. Relative to a market capitalization of $3.5 trillion, Apple's free cash flow of around $110 billion represents a yield of 3.1%. With this elevated valuation multiple, you get non-top line growth, a rapid deterioration, competitive position in China, and a lawsuit with the DOJ. And the reason why this whole China thing, it is a point to note, is because yesterday, of course, guys, Trump announced tariffs, and it was sweeping. Minimum tariff across the board was 10%. However, the first one was China, literally the first one. And Trump just put in a 34% tariff on China, meaning that all of Apple's products that we know majority of them are made in China that are then brought here, this is going to be quite a catastrophic thing for their overall top line and even bottom line to some extent. It'll be very, very interesting to see. And that is another reason as to why I really would like to take a look at Apple. So currently we can see that Apple did fall today 9.25%. Now we're not at 52-week lows when it comes to this, with 52-week lows being $164.08. In fact, if we take a look at this on the 5-year, Apple was much lower at the beginning of 2023, sub $130. And it has actually had a pretty good rise ever since. However, will these prices come back again, or is the current share price even a good value? That's kind of something that I do want to take a look at, because while we may have this and not at 52-week lows, value is just subjective. So I would like to see this on the discounted free cash flow. So let us jump now into the spreadsheet. We got the ticker for AAPL, market cap of $3.1 trillion with a current share price of $203.19. And this was down today, guys, $20.70, or about, as we showed, 9.25%. Current PE, even after this massive drop, the current PE is still 32.3. Now they do pay out a dividend of $1, which, if we take a look at this, is a mere 0.45%, with a payout ratio of 14.2, 5-year CAGR of 5.37, and 11 consecutive years of dividend payment. Ex-dividend date passed as of February 10th. Payout date was February 13th. And they do pay their dividends quarterly. And if we take a look at the shares outstanding and we multiply it by that annual dividends, we can see that they pay out $15 billion in dividends every single year. And if we take a look at the 10-year average free cash flow, we can see that they have $65.2 billion after this dividend is paid, which makes up at around 18.75%. And if we take their last year's free cash flow and we do the same math, we can see that their overall cash flow left payout ratio, it is 15.3%. Really, really nice, meaning that they can actually increase this dividend by a lot more. Price to free cash flow is currently sitting at 31.08%, where the 10-year average does seem to be at around 21.61, and their current price to sales, it is 7.72. So now let us take a look at the fundamentals. Starting with the net income, we got 2015 of $53.4 billion to 2024 of $93.74 billion, increase of 80%. Very, very nice. And I'm going to give this guys an 85%. There was a big jump here going into 2021. Not really surprising because of everybody basically just have free money. So that's noticeable as to what caused it. So it's very, very explainable. Looking now into the free cash flow, we got 2015 of $70 billion to 2024 of $108.81 billion. That is an increase of 40% with an overall average of $80.25 billion. Nice increase. It has its dips, but overall it does tend to go up in general. It's Apple, right? Overall, I'm going to give this a 90%. Now, the revenue actually looks fairly interesting. We got 2015 of $233.72 billion to today of $395.76 billion, increase of 69.33%. Again, we see the jump from 2020 to 2021, explainable. Overall, easy, 95%. Then we got the assets. We can see that assets are actually kind of stagnant. Very, very interesting. Liabilities are starting to get stagnant, but they are slightly more increasing than that of the assets. If just by looking at the graph. I think the slope in here, it's a lot more. Should definitely do a slope thing just to so that we can actually see which is higher, right? I think I should do that. Overall, though, assets minus liabilities is actually on the decline, which is not good. We can see that average total assets, it is 343.72 billion, and liabilities of 257.88 billion dollars. Assets minus liabilities ends up being around 85.84 billion dollars. I'm gonna give this guys a 70%. I don't like it. I'm giving it the bare minimum just because we are starting to see a slight uptick. But aside from that, honestly, this should be a whole lot less. I'm giving it the benefit of the doubt, though. Now, looking into the cash flow minus the liabilities. The liabilities are picking up, but so is cash flow in general, though we can see that it is fairly stagnant since 2017. Very, very consistent across the board. As of 2024, it is negative $199.22 billion. And we can see that the average is at around negative $177.63 billion. I'm going to give this guys a 70%. And now the shares outstanding. This is a really good graph. Oh my goodness. Take a look at this. We got 2015 of 22.32 billion shares, billion with a B, to today, or to last year, of 15.11 billion shares. That is a massive buyback, absolutely enormous buyback of 32.6% on the 10-year. That is insane. In fact, I do believe that they've never issued either. They have very consistently bought back. In fact, previous year to the current year, it is a 2.79% buyback. I'm going to give this, guys, a 100%. And lastly, cash and equivalents. They currently hold 29.9, let's just say $30 billion, with an average of $29.4 billion. Overall grade for this, for me, ends up being, guys, an 88%. It's Apple, not really surprising here. The biggest issue I have is really the assets minus the liabilities. But aside from that, profit metrics are great. Yes, I understand that they have issues when it comes to Greater China. I think that they have enough cushion to weather the storm when it comes to that. All in all, though, 88%, really, really solid. However, does it pass the current valuation for the company? Let's use discounted free cash flow to see what this actually says. So let's take a look at the discounted free cash flow. We got the average revenue growth at around 5.94% or 6%. Average free cash flow growth at 4.9 or 5%. And the average share change is a buyback of 3.85, which is very consistent. I would actually argue that that number will continue to be in that general direction for quite some time. And now for my overall assumptions, I'm going to say a revenue growth of 3, 5, and 7%. Free cash flow growth of 2, 4, and 6%. Share change of 2, 3, and 4%. Discount rate, I'm going to do, guys, 10, 8, and 6, which it is based off of course, I asked Grok. We can see right here for Apple, the discount rate say at around a low of 10, a high of 6, and for the terminal value 2, 3, and 4%. So that's exactly what I did. And these are the share prices, $105.65 to $614, with a margin of safety of 5, 10, and 15, $89.77 to $583.24. So by the looks of it, guys, we are starting to fall right here in this median line. But even then, we were still between the median and high assumption. You guys are probably looking at this and you're like, that high assumption is extremely high. Yeah, it mainly has to do with the fact that the discount rate, it's going down by 2% basically in every single assumption. That does play a big role, as well as a revenue growth of 7% and a free cash flow growth of 6% compared to 3 and 2%. So just fully understand that every investment is the present value of all future cash flow. And yes, I know I still haven't released this. I need to release it. I really do need to release it. I will release it. It's been a rough week, but hopefully I can get that done soon. I'm gonna stop making a date of it because I don't want to make a date, but I will release it very soon, so that way you guys can make your own decisions for yourselves. But I look at this and all I think is just, you know what? $203 versus $201. There is no difference in my personal opinion. Apple, with the great fundamentals that it has, it does seem to be a pretty good buy based off of my assumptions. But again, make sure you do your own due diligence when it comes to this. Every investment is the present value of all future cash flow. This is not financial advice. And lastly, when it comes to the dividend, we can see that putting in $6,215, this nets you only 30.59 shares. And with only $1, well, you get $30.59 per year, which per quarter ends up being $7.65 and monthly $2.55. So there you guys have it for Apple. Now, we have a lot more stocks that we could talk about, but before we end up the video, I really just want to say one thing. Nobody should be panicked about this. Nobody should absolutely be panicked about this. This is a great opportunity for everybody to buy. In fact, I did some buying today, about around $5,000 worth of stock, some for my Roth IRA, some for my baby boy, and some for myself. And if this continues, I will probably buy some for my wife tomorrow. But again, not a time to panic. If you are focused on a strategy that involves long-term investing, this is not an issue in the slightest, guys. This is not an issue. In fact, if you follow a dividend strategy, all this is just giving you a higher yield on cost. That really is it. So take advantage of this opportunity. It really is an astounding opportunity to buy companies like Broadcom, $154. This thing was $250 in like December, end of December of 2024. So it's a great opportunity. Look at this. Nvidia is almost sub 100. Absolutely crazy. Microsoft 373. Apple 203. It is looking absolutely incredible, guys. Absolutely incredible. So please do not panic. Please take advantage of this tremendous opportunity, because if countries begin to fold and they begin to beg Trump to stop it, and they begin to actually come to the table and negotiate on different tariffs, this will go away, because if those tariffs are reciprocal, that means that if countries begin to cut their tariffs, Trump will cut the tariffs here. So this may not last. Take advantage of the opportunity. Do not fret. Do not fear. Be greedy when others are fearful. Be greedy when others are fearful. That is the quote. Be greedy. So hopefully that helps. I will have a lot more videos, and well, this channel will have a lot more videos talking about this if this continues to occur, because it's beautiful. It really, really is. That pretty much does it for this video. Make sure to like, subscribe, comment. It really does help with the algorithm on YouTube as well as Rumble. Make sure to follow us on X at Fatal Investing. And of course, if you would like to join us on the Discord, there's a lot of smarter people there than me, let me tell you. Make sure to follow the link in the description below for that, guys. It is free. So with that said, peace out, and we will see you all next time.